This video we're going to look at the relationship between the emissions trading scheme as part of the government's environmental policy and its impact on inflation. So to recap the two things that we're going to look at, emissions trading scheme. The emissions trading scheme is a cap and trade system where there is a finite amount of carbon permits available in the economy, and we're going to say if the proposed scheme goes through, is going to be at $25 per ton of CO2 emissions. So this cap system only allows a certain amount of CO2 to enter the atmosphere. And this trade system, in fact, creates a market for carbon permits. So now that businesses have a cost to pollute, this would actually discourage them. We'll see how this links to inflation. But before we go into that, we're going to look at revise the concept of inflation. So inflation is the general rise in prices for goods and services. Now inflation comes in two ways. Firstly, it comes in demand inflation, and secondly we have what is known as cost inflation. Now demand inflation occurs when aggregate demand in the economy exceeds aggregate supply. But we can see in this situation, or this scenario, with an emissions trading scheme, this doesn't really affect the aggregate demand in the economy. Rather, it actually may in fact slow aggregate demand because inflation will tend to rise. We're going to go through why that occurs. So aggregate demand exceeding aggregate supply may not be a problem in this situation. However, as we can see, cost inflation may occur. And this is because these carbon permits, which are at $25 per ton, actually increase business costs. So as we know, businesses all seek to maximize profits. So that's rule number one for economics, is that businesses exist to maximize profits. And I've stressed this many times that when businesses experience an increase in production costs, they would tend to increase their price and pass it on to consumers so as to protect their profit margin. So instead of decreasing their profit levels, as the government imposes this $25 per ton carbon emission, or $25 per ton of carbon permits, they would then add the cost of these carbon permits onto their final price. So as a result, the projection is, or the estimation by the government, is that in the short run, CPI will increase 1.1%. And this is just an estimation. And the causes of CPI increasing by 1% include that gas prices and electricity would increase by 18% and 12% respectively. So 18% corresponds to electricity bills, because at the moment electricity is primarily coal powered, and 12% increase in gas bills. So we can see that by putting a price on carbon, this would actually tend to fasten cost inflationary effects. So the relationship between the emissions trading scheme and inflation is that in the short run we would experience an increase or a spike in cost inflation right here. I'm just going to put an asterisk right here. So cost inflation in the short run will increase because as business costs increase to maintain or protect their profit margin, these businesses would tend to increase the price of their goods and services. However, there is good news to this, is that this is often a one-off increase in price. And after this once-off increase in price, it would actually steady once again. It will stabilize at that higher price. So what that means is that after the businesses increase their price from say $10 to $20 to protect their profit margin, they're not going to increase the cost of the good or service from $20 to say $25 because they have no need to, because the cost of carbon permits stays relatively constant here at $25. So that's a good thing, is that the increase in inflation is only a once-off effect, and although the emissions trading scheme or any carbon pollution reduction scheme that places a cost on emitting carbon dioxide into the atmosphere would actually result in a once-off increase in inflation in prices, and therefore after that stabilize to a steady state of inflation yet again. So to conclude this video, we can recap that the emissions trading scheme would cause an adverse effect to inflation in the short run.